Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Wednesday, January 15th, 2014. It's about 2:15 p.m. Eastern Time, and the markets are solidly up across the board. Second day in a row after a big drop on Monday. What does it mean? Well, listen, it's very simple, folks. I talked about this in yesterday's video, and basically what we were looking for is a negation of yesterday's, or I should say Monday's downside move, and then whether or not this market can close above the previous high. All right, what's the previous high? Well, the previous high, the all-time high on the S&P 500, or in this case the SPY, zoom out, and you can see it right there. X marks the spot. So what you see here from the 31st of December 2013 is that the market today pushed above that, but is currently hovering just below that level. So on a technical basis, I'm focusing in on this blue line with the utmost care. All right, this blue line is unbelievably important because at the end of the day, we want to see if this market closes above or below that line. If you close above, you have to tip your cap to this market. I don't think the market's out of the woods, and I think you will have downside, but at least in the short run, that's a positive signal. All right, now upside, what are we talking about upside potential? Well, really, there's barely any upside potential. Maybe 0.5%, a 1% move above these highs. But bottom line is, it could happen then. I mean, once you see a close above that level, it is a possibility. Now, if you do not close above the high, the all-time high on the S&P, which is, I think, the 1849-ish, 47-ish area, if you don't close above that, then look for downside. Still be bearish on the markets. All right, so it's very simple to kind of gauge your bias for this market. If you close above, good. If you close below, bad for the market. All right, and again, even if we close above, upside should be limited based on the channel that we've been creating, the 3% band on the daily chart. And look at this. I mean, you can just see how this market right now is kind of trying to get above but having a little trouble at that same level. So it should be an interesting little thing as we kind of continue into the end of the day. But these upsloping trend lines on the daily chart of the S&P 500, if we zoom back to 2010, all right, again, I did a lot of research on this, and basically the market has a lot of trouble getting more than 3% above these lines. So these two lines, you can take the top one, use the top one. See this upside move here? That was about 3%, and we pulled back. Then you had over here an upside move of 3%, and then we kind of stalled out and have pulled back. Now we're trying to push up again, and there might be a minor amount of through side to the upside, but it should be very minimal. Should be very, very minimal. Now, the markets, if we go back to the intraday, are right into that level, trying to push above it. This is going to be very important into the end of the day to find out exactly where it ends up going. All right, I'm watching this like a hawk here because, again, it will tell me and give me a bias for the coming days. All right. Apple is doing well today. Apple's Tim Cook was on CNBC, or at least clips of him were, and he was discussing the China Mobile deal, and obviously that's a positive for the stock, and the stock has responded today. Second day in a row, it's had a big move up. Take a look at this. So this stock broke down and then reversed, and is even gapping. It even gapped above the 20 MA. For you guys at home or watching this video that have taken my Elite Keys to Limited Success webinar, you know that that's a signal. That's a river theory there. Now, river theories at the highs of charts have a tendency to have a higher failure rate, but nonetheless, you got to tip your cap to it. Right now, that is a nice little one, and it is playing out so far. Even though you probably, at this point, get a little bit of a consolidation pullback on it over the next few days, I do think down the line, as long as you can stay above this 20 MA, look for this double top up here around the 575 level. All right, I thought Apple was a sell here, and they reversed it on me very nicely, so I give them a lot of credit for that. All right, couple other things to go over. Potash, POT, getting a nice move today, up about $1.11, but notice where it is, piercing the 200 MA, extended move. So I'm not that high on Potash, POT right now. Um, One sector I did highlight on the radio yesterday and this morning, which is my favorite sector right now, was the shipping sector. I highlighted dry ships via the radio spot, and I do a radio spot on 8:20 a.m. In the mornings and in the afternoons after the market closes. And one thing I gave our listeners there on the radio was to watch dry ships. I said it yesterday after the market closed and this morning before it opened, and look at dry ships today, up 25 cents. All right, why did I like this play? Because, frankly, even after the jobs report last Friday, the economy is definitely improving, which is good for dry bulk shipping. And in addition, look at this pullback from $5 all the way into the 50 MA here. All right, very low risk with upside potential here for a bounce at least back to the 20, so a little bit more upside. And again, up 25 cents on that stock today. Just a great move there. All right, and I continue to think that you'll see a little bit more upside on DRYS here in the coming days. Okay, so that's a nice one to focus on. There's been a lot of good trading plays today. Made some money in the intraday stock chat on Freeseas FRE, which is another shipping play. NEWL looks like it's pushing up very nicely as well. That's another shipping play. You name it, the shipping plays are hot today. All right, EGLE, PRGN, DSX, they're all doing pretty well. All right, so that's one sector I was highlighting yesterday. Turned out to be a winning sector. A couple other things to note here. We do have some downside in certain stocks, namely Amazon. Amazon's one that's lower. And one thing I highlighted to my members recently here is that Amazon, over the last month or two, has been making slightly higher highs, but they're getting smaller and smaller. And this shows distribution and this shows weakness. So here you have a nice firm upside move. And then right here, you get a little bit of a higher high, right? It's made a higher high, but barely at all. And then right here, you made another higher high, but it was only by pennies. And then each time it's pulling back. So I'm actually negative on Amazon based off that signal. That's just a classic technical signal of weakness in a stock when it's at all-time highs and you're seeing higher highs being made, but by barely at anything. And that's actually one of the reasons why I think it's important for us to watch the SPY or the S&P 500 here, is because, if you zoom back here, right? All right, so if we look at this portion of the market, basically from October on, here you had a high off of a big move up. All right, then you made a little bit of a higher high and pulled back, and then you made a little bit of a higher high, pulled back, and then today, intraday, you've made a higher high and you're pulling back. So what we're trying to figure out here is this same sort of signal that's occurring in Amazon also occurring in the market. It may not. I mean, we could surge higher and then that's negated, but it's just the things you want to kind of pay attention to. You want to make sure you're kind of on point when it comes to reading the charts properly. All right, so that's going on there on the SPY on Amazon. JP Morgan is having a great day. Yesterday they reported earnings yesterday morning, and the stock really didn't do much. It actually closed flat on the day after a pretty big rally day in the markets. Well, today Bank of America reported earnings before the bell. Bank of America earnings very good. The stock up substantially, and finally JPM getting some buyers, or maybe more short covering, as the stock has surged to the upside. So kind of interesting just to see that aspect of it, as JPM again. Good move. $1.40 on JPM on a $59 stock is tremendous. That's a big move for that stock. Goldman Sachs is having a good move, not quite as big percentage-wise, but let me just take a look here and bring that one up. Goldman Sachs, here you go, up $2.66, not quite back to its 52-week high. 2014 early in the year. And you can see that topping tail right there. That was a great sell signal. Took it right down to the 20 MA and then bounced it up just a little bit. All right, we just got the beige book out around 2 o'clock and really no impact. The beige book just confirms what everyone's been saying, that the economy seems to be doing a little bit better. If we flip back to the spiders, you can see we're briefly above that closing level there, which again will be watched like a hawk into the end of the day. I'm so curious about where that's going to close. And again, it just basically gives me the bias to kind of understand if the market is in a weak position or is it in a neutral to positive position. All right, and that's the closing level right there. And that's basically the former all-time high in the market is that line. And we pierced it today, as you can see intraday 10-minute chart here. But we want to see where we close. Do they sell below or above? And again, that should give us a buy or sell signal for the market over the next few days. All right. What else do we have here? Let me just scan through some small caps continuing to rock and roll. Exxon and Chevron are both down today. Oil's actually, last I checked, oil was having a good day, and it continues to have a good day, although it's rolling a little bit. But for the most part, very nice day there. Gold is just having a pause day, down 50 cents. Had a little bit of downside yesterday as well. But to me, on pullbacks, gold can be a buy. For me right now, you'd be looking right here and right there. That's what you're going to see. All right, so that's where it probably goes, which is a gap fill, and then you can actually look to buy gold again. All right, I played earlier from last week into this week. I played Yamana Gold, and I sold yesterday at the highs, which was perfect, as it was a perfect little resistance area. Now it's pulled back, but I actually will be looking to pick up Yamana Gold again. All right, pick it up again if it pulls back just a little bit tomorrow, maybe down to about the 905 area or so. Just right in that range, I think, is a great opportunity for the next leg up on Yamana. Great chart because it's above the moving averages now. Right here, you can see it's broken through. It's confirmed above them. Now you want to see a retrace into that level, into these moving averages, kind of right in this area. Maybe even a pierce of $9 would be sweet. And if we get that, then I think there is some good substantial upside potential there. All right. What else do we have here? Just kind of scanning through, breaking up the charts here. I think that's about it for now, giving you guys a little bit of a view. So again, watch the close on the market. If it does close above, you basically are in a neutral to positive with a minor amount of upside available. If it closes below, keep a negative bias on it, as again, I don't trust this market any further than I can throw it. I think this market, in all fairness, is in a major disconnect. All right, the Fed just another. I think Lockhart just came out with some comments of Fed president, and he basically said we're going to continue to taper this year. So the market has to realize the QE is going away. The money printing that has propped this market up is going away. When it does realize that, I do expect downside in the market. Absolutely, guys. All right, it will happen. It's kind of like a drug addict getting the drugs taken away. There's going to be a withdrawal syndrome, and that I think is a issue that the market is going to have to deal with at some point. Right now, there's no recollection of it. There's no issues. Everything seems hunky dory. But at some point, reality will strike. And I think the market gets a little bit of a shudder at that point. All right, guys, so on that note, I'm going to say goodbye. Again, come take the 7-day free trial to the Research Center if you're a swing trader or an investor. 7-day free. And again, so much money to be made. Great start to 2014. Unbelievable 2013. 2013, as I'm closing out trades from 2013, net profits right now are sitting around 500%. That's if you add up all the winning percentages versus the losing percentages, it's a 500% plus. All right, even if you just put 10% of your portfolio in each one, you banked 50% last year. Incredible. And in all fairness, I'm going for 750 this year. 750% this year. That's my goal. So I encourage you to come join us at inthemoneystocks.com. I mean, really, even if you're doing a free trial, even if you decide to pay $50 a month to make that type of money, I mean, you're kind of idiot if you don't do it, in my opinion. Anyways, enough of that said. Have a great afternoon, great evening, and come join us here at inthemoneystocks.com.